Hi, everyone. Let me just give everyone the ability to send messages. Okay. Hey, everyone. I just sent everyone a message, right? We're going to use that as the main way that for us to communicate, right? Yeah, I can see that if when you're choosing who to send to, you can choose to send to everyone instead of just the host and panelists, right? So that ensures that if you're asking a question and you would like other people to also know what question you ask, right? It'd be better if you do it to everyone, right? Nice to see everyone coming in, right? A lot of familiar names here, right? A lot of familiar names. Where are you guys tuning in from? And bonus points for anyone who knows which country I am hosting this webinar from. Right. All right, cool. Yeah, Cleon, I'm pretty sure you attended my previous webinar, right? I'm vaguely familiar. Right. Oh yes, okay, you guys got it right. Singapore. All right, got Ram from Philippines, we got Dana from Czech Republic, Leonardo from Colombia, Yose from Philippines. It's very nice. Uma from Nigeria. It seems like we have quite a wide range of people tuning in from different time zones over here, right? Okay, Blickish from South Africa, right? Should be pretty early in the morning for you guys. Gerald, Gerald, are you saying that I'm tuning in from Singapore, or are you from Singapore, right? And additional bonus points if anyone can guess the building behind me, right? You need to be very familiar with Singapore, right, to be able to guess the building behind me. But thanks for tuning in for today's special webinar session. Oh yeah, from Kenya, cool, right? Quite a number of people from Nigeria and Kenya. Chunhao, pretty close, not around the area, in the Raffles Place area, right? So pretty close to but it's not the Marina Bay Financial Center area. I wish, right? Yet to move my office there. All right. So feel okay, cool. Philippines, quite a number of you guys from Philippines. Very nice, very nice. Quite a number of my team members from Philippines too, actually. Right. I heard that there's been a lot of flooding over there. Right. So it's been like monsoon after monsoon or stuff like that, right? Okay, good stuff. Thanks for tuning in from Ghana, NASA. Right, so today's session is going to teach you guys about Fibonacci, right? Fibonacci Confluence. It's a strategy which I used, right? And if you're familiar with prop trading, right, I used it, and within 4 days, I think, right? But my best record was 4 days, right? I was able to pass the prop firm challenge, right? It's a strategy, it's a contrarian strategy, meaning that it's a reversal kind of strategy, right? You're looking to always play the reversal. And the good thing about reversals is that you tend to have a pretty good risk to reward, right? So you know where's the level you're going to play reversal from. If you're right, you're right. But if you're wrong, you're only risking a small amount. So you don't need to risk too much, right? When it comes to what we call a reversal, contrarian strategy. So what I'm teaching you guys today is that reversal strategy. The opposite of a reversal strategy is a breakout strategy. All right. So breakout strategies, you guys who have been familiar with it, right? Price to breakout, and you either buy on the pullback or it goes up, and it goes in the direction of breakout. Usually a lot more leeway. Price might weak you out and stuff, right? So what I'll be teaching you guys is a reversal strategy, right? You guys are familiar with the messaging system over here, right? So I want to encourage you guys, anytime you have questions, just send a message through. I literally have another screen that is open over here, just monitoring the questions that come through. So for those of you guys who have attended my previous webinars, right? I think the last idea was 1 or 2 months ago. We rarely have time to answer all the questions, right? So just take your chance to ask the questions along the way, right? We'll have a nice special promotion once again. For those of you guys who have missed out 2 months ago, right? We have another, I would say a month ago, 2 months ago, right? We have another one this month, right? And some of you guys might have got it because the spots were taken up a little bit too fast, right? But they don't worry about it, right? Sony is saying my microphone sound is unstable. Can I check with everyone else? Is the sound okay? Right? Yeah, is the sound okay? Is there something wrong with it? Perfect. All right. All right. So it's okay, right? It's okay. I just taking a screenshot of this, right, so that I can investigate later on. Right. Okay, it's good from here. Maybe it's the speaker that you have. No, I'm just gonna check it. It's yeah, it's using this microphone, so it should be okay. All right, guys. So microphone's fine. All right. So let me begin today's session. Let me begin today's session. I'm going to play. Play. Plop, plop, plop. Give me a second. I'm gonna share my screen with you guys. Cool. So just checking, is everyone able to see the presentation slides? All good? Okay, good stuff. All right. I'm going to get a little I'm going to try to take out my little pen over here. Just give me a second. I know I have ability to Zoom has the ability for me to take out like a pen to draw. Right. I'm sorry, just give me a quick second. They have this thing to draw. I just can't find it for the life of me. Man, it has to be somewhere. Never mind. Later on, if I somehow come by it later, it's fine. I shall not waste any more time. Let's begin today's session. So we're going to teach you guys about the Fibonacci Confluence trading strategy today. All right. So disclaimer: remember, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. All right. So a little bit about me. All right, founder and CEO of Rocket, a prop firm trader. My entire team has, if you're familiar with prop firms, you know, we've passed it more than 15 times, right? We're institutional research house, won the best FX and best equity research. We're finalists for 2019, 2020, and 2021. Right. Notepad. I'll try the notepad later. Thanks, Reginald. Right. Yeah, 2019, 2020, 2021. Right. Yeah, pretty good stuff, right? I think we know our stuff. Right. We provide research from many of the largest brokers in the world, right, including IronFX. So this is a special session, right, which IronFX has arranged for me to teach you guys a really good trading strategy and give you guys some pretty good prizes at the end. All right. So our agenda is very simple today, right? What is Fibonacci? Right? Different types of Fibonacci. I'll be teaching you really in depth how to use it, right? And I'll show you how you can use Fibonacci Confluence, right, for trading. Very, very effective. right? Abdul, nice for you tune in. And the special prizes at the end, okay? Oh, I found it over here. Okay, I found the place for me to draw those stuff. All right, so for Fibonacci, right, some things that I want to teach you guys, right, is that the ideal market structure, let me have it. Yeah, is it here? I'm just going to pick the the ideal market structure for Fibonacci. You can't just use Fibonacci anywhere, right? And when you're drawing Fibonacci, what you want to avoid are these things like a little, you don't want to look too much into the minor fluctuations on the market, right? This what you see over here, right? What you see over here is like any market. You pull up any chart on MT4, you pull up any chart on MT5 or TradingView, you're going to see this chart. What you want to avoid when using Fibonacci is you don't want one that has too many little fluctuations, all right? You want to look for the significant levels. You want to look for the big kind of Fibonacci levels to draw your points from. Let me show you what that means, okay? Let me show you what that means. All right. So this is what I mean by unclear market structure, right? Yes, Chunhao IronFX is regulated and they are safe, right? So I mean they are regulated in Cyprus, if I'm not wrong, right? So one of the bigger brokers around, right? In the Cyprus space, right? I mean they're not regulated in Singapore, right? If that is what you're asking, but they are a regulated broker, all right? So personal experience, yeah, they are safe, right? I have an account with them too, right? I have an account with all the brokers I work with. Safe enough to trade with. Okay, unclear market structure is this. You want to avoid using Fibonacci on such market structure. You usually see this. You usually see this on the exotic currencies, right? So this could be something like the like the dollar ZAR, you know, or dollar peso, for example, right? Thank you, Abdul. Right. So yeah, it's you usually see this on the more exotic or emerging market currencies. And you also see this on the smaller time frame. So 1 minute time frame, 5 minute time frames, you see this pretty often. Right. So you want to avoid using Fibonacci on this, right? So I would say, right, try to avoid Fibonacci on the lower time frames. I usually begin using Fibonacci, right, on the 30-minute time frame, the 1 hour time frame, 4 hours and beyond, right? But not the 1 minute, the 5 minutes, or the 15-minute time frames. Okay. So Chua, it can be used for all, right? I've used it on FX, I used it on indices, commodities, right? I haven't had too much I haven't had too much experience using it on stock and crypto, but no, crypto I did for the major ones like Bitcoin, Ethereum. I didn't use it on meme stocks yet, right? So I'm talking about like the Doge coins or the I don't the smaller meme coins, right? I haven't really used it yet, right? And tested it on the big stocks, they work fine, right? Probably stay away from the small, like the really penny stocks. So penny stocks are what are like the equivalent of emerging market currencies or exotic currencies, right? In the FX space, right? Not enough volume. Fibonacci works by, I mean, a large part of it is, of course, the market. For there to be an efficient market, right, there needs to be enough players in the market, right? So if there's a meme coin, there are not enough players in the market, it's not exactly efficient, it can be manipulated. The moment it can be manipulated, any form of technical analysis, right, is thrown out of the window. All right. Now, moving on from here, this is what I prefer for market structure, right? You're gonna look here, you're gonna see, you notice that, the movements are a lot clearer. You want to take the key reversal points, right? You want to take the key reversal points when you're drawing Fibonacci, okay? Definitely take the key reversal points when you're drawing Fibonacci, right? Now, what do I mean? The next thing is you must follow the market structure, right? You must follow the market structure. So like what I'm drawing here in this example, right? If you were to have, like this movement here, right? You can see the market goes up, the market goes down, and the market goes up, right? You notice the Fibonacci line that I just drew, right? I'm going to draw a dotted line through. The Fibonacci line that I just drew, right, did not follow the market structure, right? When you draw Fibonacci, there's this thing like a Fibonacci trend line, right? This trend line should follow the market structure. You either take it from here all the way to here, or the top down to here, or down here, down to here. You cannot, if this is the market structure, you cannot just draw the line and ignore, right? Ignore the larger market structure over here. So the Zinco, right? I did mention for Fibonacci, I tend to focus on the H1, right? The H4, the 4-hour timeframes, and the 1-day timeframes, right? It works better on these timeframes. It doesn't work so well on the smaller timeframes, like the 1 minute, the 5 minute, the 15 minute. Okay. Now, so this is, yes, remember, don't follow the wrong market structure. Okay. The next thing that I want to show you, this is the correct way, right, to draw Fibonacci, right? You notice that we follow the market structure, right? And of course, in this case, right, as long as there isn't, so this is a subjective part of it. As long as it doesn't deviate too far from it, it's okay to cut through, right? So like what I shared earlier, right? In this case, right, like if I were to draw it over here, if you have this movement over here, it's okay to draw a Fibonacci from here all the way to here. Okay, it's perfectly fine, right? But if your movement was like this and your market start moving like this, it's not okay to draw a Fibonacci from here to here, right? Because if you just drew a line and you connected it, right, you notice that price would deviate very far from the dotted line. Right? If you drew it from here to here, you notice that price wouldn't deviate too far from the dotted line, right? So you're looking for like this kind of market structure, it's enough. It's okay to draw Fibonacci, right? With practice, we'll get the hang of it. Okay? All right, so don't worry. I'll show you guys how you can get more practice on this later. It's not an easy topic, but one thing I can assure you, when it comes to trading, there are a lot of indicators you can use out there. There's lagging indicators, right? These are like the moving average, right? This is like the Ichimoku and stuff like that, right? Then there are the leading indicators. There are not many leading indicators in the market. Things that can actually forecast where the reversal is going to happen, right? There are very few that can do that. Take it from me. I've been in the market for more than 10 years, right? I worked in a French company that advised the largest trading desk, Brevan Howard, right? Goldman Sachs, Citibank, right? We worked with them, right? And we've went through every single form of technical analysis instrument out there, right? We know how to trade here. We've made, we've passed multiple prop firm challenges, right? And I can tell you there's very few leading indicators in the market. One of them is Fibonacci. The problem is that Fibonacci is so damn hard to learn, right? It's so many ways. I'll be showing you later. There's so many ways to apply Fibonacci, and a lot of what you learn online is wrong. A lot of what you learn online is wrong, right? So hopefully I got nothing to sell you here, right? I mean, this special webinar has been sponsored by IronFX, right? So they're sponsoring today's session. Hope to at least give you all the knowledge, right, on or at least enough of it, right, so you can take the next step in your trading journey. Okay. Now, so how do I remove this? Let me just remove my drawings. Let's move on to the next part. Okay. Right. So there are a lot of different Fibonacci levels here, which I kind of want to show you. Right. So it's not as simple as it seems, right? When you draw a Fibonacci retracement, there are those that are from 0 to 100. These are called Fibonacci retracements, right? Retracements. Those that are negative are Fibonacci expansions. Those that are above 100% is Fibonacci extensions. All right, retracements, extensions, expansions. Later, we'll be talking about Fibonacci projections. Okay, projections over here. Okay. I think IronFX might have one, right? You'll see, right? So, I mean, of course, I can't recommend any, but they might have one. I need to check, right? But if they have one, then that'll be the one that would tell you guys to use. Okay. But you know me, I can't, of course, on air recommend any. Now, so yeah, different Fibonacci levels. There are a lot. Let me break it down for you guys. Okay. But knowing how to utilize expansions with retracements and extensions and projections is a secret. Okay. It is a secret. I mean, knowing how to then do support and resistance, right? Momentum, and maybe throw in a little bit of correlation, right? Then you have the strategy, right? That you need, right? That can take you for a long time. Contrarian strategies are very good because it doesn't matter, you know, what trend the market is in. Some strategies only work in bullish trends. Some strategies work in choppy markets. But Fibonacci, if you know how to use it right, you know how to use Fibonacci Confluence right, you're just playing that short little reversal. Doesn't matter whether it's a trending market or choppy market, it will set you for life. Okay. How much market deviation is acceptable? That's a subjective nature of it. You come with practice. We run through a little bit later on, Bill Kish, right? So now moving on. This is how you draw a Fibonacci retracement. Very simple. Okay, very simple. Right? You start from here and it goes all the way down to here. You notice you click on here and it goes all the way down. Now, what is a Fibonacci retracement? Let me just pause it right at the end over here. What is a Fibonacci retracement? I'm going to show it to you here, right? You notice when I have a starting point over here and I have an ending point over here. There are a few numbers over here, might be a little bit hard to see. There's a 23, 38, 50, 61. Now, these are not magic numbers. What it basically does, like for example, 50% is 0.5, right? It basically tells you that the total distance from here to here, right? Your starting point of 1 all the way to your starting point of 2. If this total distance was like 100 points, right? The 50% retracement is exactly at the halfway mark, right? It's exactly at the halfway mark. That's exactly what the Fibonacci retracement is about, right? It just tells you how much of price is retracing. When price, you know, you just draw from here all the way to here. When price comes up this much, it means that it retraces 23% of your move. When it comes all the way up to here, right? It has retraced 100% of the original move. That is what Fibonacci retracement means. Yes, you have to capture the wick. You have to capture the wick. The reason you need to capture the wick is because the top of the wick is universal across all time frames. Okay, the top of the wick over here, right? If you're drawing a candle, this starting point, right? This high over here is the same on the M1 chart, it's the same on the H1 chart, it's the same on the D1 chart, right? You have the same high point. The body of the candle, when the body closes, changes from each candle to candle, right? On the 1 hour candle, it might be here. On the 30-minute candle, this might be the close price, right? Because it changes. The wicks are your reference points. Okay, so you have to use the wicks, Sylvester. Now, moving on. Invalid retracement. Now, let me show you what an invalid retracement is, because knowing what a valid retracement is as important as knowing what an invalid retracement is. Okay, invalid retracement, we have a starting point over here, right? We go all the way down, you know, it follows market structure very nicely, right? And Fibonacci retracement, for it to work well, just remember, you need to think in the form of V's, right? You need to look for the V's, right? You need to look for the zigzags. You need to look for all this kind of stuff. That's the kind of movement you need to look out for. For those of you guys who are into harmonics, Fibonacci has a lot of relationships with harmonics. You notice that harmonics might have something like this, the bat pattern, right? Might have something like this. All of it right, is formed with little V's and little M's and little W's. All right. That's another crazy session. One day, if you can ever find me in Singapore, over coffee, I could explain it to you. Or if you want to go into crazier theories, can have it over whiskey, and I can explain to you all the theories behind Fibonacci, Elliott wave, Hurst cycles, and harmonics, right? But it's all interconnected. We don't need to jump into that today. It's a crazy thing, right? But what you notice is that it comes down two reasons why this is invalid. Firstly, price did not, the moment, like when price is still coming up to here, it is still okay, right? This part at this point over here, it's still okay. But when it starts to go down and deviate, it starts being less effective, right? Because remember, we're looking for V's, we're looking for M's, we're looking for W's, right? It starts to go down, it starts to become invalid. In fact, I would argue over here is already invalid because, you're looking ideally for a very sharp movement up. The moment it becomes completely invalidated, right? The moment it becomes completely invalidated is when it comes into this area here, right? Because it goes below 0%, right? It becomes completely invalidated. All right, so the Fibonacci retracement is not valid anymore. Abdul, good question. I used to do it a lot more, but less now. You are able to find me in the VIP trading room, like the IronFX VIP trading room. I think you need there's a promo right today, right, that gives you access to that, right? But yeah, I'm usually I am I don't usually do that many streams anymore, right? If we retrace above or below the 50%, is the reversal still valid? Okay, so now next question. Okay. Good question from Mr. Note 10, right? So when price comes down here, and let's just say it breaks the 23% retracement and it comes all the way up to 38%. The moment a retracement is broken, that's it, right? That's it. It is broken, right? It's invalidated. This 23%, don't use it anymore. Price can come down again and come up to here again. It is not valid, okay? It's coincidence that it reversed from here, but it does not work anymore, okay? The Fibonacci retracement only works on the first time it tests it, okay? You can plot the Fibonacci on the line graph too. Yes, you can, because it's all just price, actually. But I would say a bar chart would be okay. Sorry, yeah, a bar chart might be okay, but line graph maybe not, because line graph actually uses, like, for example, you might use the closing price. And if you use the closing price, you won't be, your closing price, if you're using a line graph, would be over here. You'll be taking the Fibonacci retracement from here. You would miss out on the wick over there. So no, sorry, don't use it on a line graph. No worries, I'm always glad to share it for free. It's not for free, actually, because IronFX paid for it. So I guess it's on there, right? It's for your benefit, okay? It's for your benefit. Now, projection, another one of my favorite ones. Okay, Fibonacci projections. 3 points instead of 2 points, right? Let me see if I have an example here. See, you draw from here, middle point, and your ending point. Okay, you have 100% Fibonacci projection. What happens to price? Price comes down, touches the level, right? Touches level over here, and then it takes off in the other direction. This is essentially what Fibonacci projection is. Okay. Oh, sorry. Yeah, this is essentially what Fibonacci projection is. I just wanted to play this. Yeah. Yeah, it takes 3 points. Now, how does Fibonacci projection works? Don't let the confusing name confuse you. What you're basically doing is you're taking the vertical distance from point 1 and point 2. So if this is the vertical distance all the way, so maybe the vertical distance here is 100. You're taking it and you're projecting it down another 100. Okay? Some numbers to use for Fibonacci projection, right, is 100%, 61.8, 61.8%, sorry, and 78.6%. 78.6%. I will use these three, right? This video recording, it might be available. I'm not sure, right? But yeah, it might be available. I don't have a YouTube channel, right? Currently, I only do it for do this live stream, especially for brokers, right? So if I'm invited, right, usually the rest of my team, they're equally capable. They are doing the weekly live webinars for IronFX, right? But yeah, if you want to find me around, every now and then you should be able to see me host a session, okay? Or you can find me in the VIP training room. I'll share more details on how to get it later. Now, Fibonacci projection 61.8, 178.6. These are the only levels you need to know. Moving on. Okay. This is how a Fibonacci projection looks like. Okay. Let me see if there's next one. Yeah. See, you have a starting point here, right? You have a middle point. Sorry, I need to use my handy dandy drawing. You have a starting point over here, right? You draw it all the way down to the middle point, and then you draw it all the way up to the ending point. What happens is that it projects down, right? In this case, if I were to look at this, this is 100% projection down here. Notice how price would come down, touch this level, and then bounce off. It is not by chance that price randomly bounces off like this. Just try to use it. The trick here, guys, is zigzags. Look for the zigzag. The clearer the zigzag, the better it is. Okay, the clearer the zigzag, the better it is, right? If you notice there's something that looks like this and then looks like that, right? It's not clear, right? The clearer the movement, like this, very clear down, very clear up, very clear down. You need to use this, right? So Fibonacci projection, I believe if you're using TradingView, right, it is actually called trend-based Fibonacci extension. I will now maybe I have the VIP training room here. I could show it to you guys. I have another screen here. I will show it to you guys. Okay. You guys should be able to see a chart now. Are you guys able to see a chart? Yeah, okay. So it's called trend-based Fib extension. This is the IronFX VIP trading room, of course, right? And yeah, you know, it's what you do is you click on it, right? And you select one point, you select the middle point, and you select the ending point. All right. Now you might think that this doesn't work, but just look at this. Right? Look at this over here. Even the 78% projection, right, over here, when price touched it, right, it actually bounced up. This is where you make your money. You know, the trend, show me the money, right? This is where you make the money, right? You're not looking. This is not where you make the money. And this is where you make the money. I'd rather have a high probability of being right in over here than have a medium probability of being right over here. Just take note of this when we cover more details later. Okay, I think so if I wanted to teach you guys, right? And this is something pretty cool, right? So you might come in here and you might try to draw a Fibonacci projection. Bam, bam, wham, bam, slam. Right? And see, look at this, right? 100%. You can say, hey, Desmond. Hey, Desmond, right? Is this how you draw a Fibonacci? Okay, the correct term for it is Fibonacci projection because you're projecting a price from one to another, right? Now, what are you referring to? Just highlight the text that you just drew, link it to this Fibonacci that you just drew over here, and you click confirm. So when you send a message through, right, and I'm reading it for the first time, it's like, hey, Desmond, is this how you draw a Fibonacci projection? Oh, what are you referring to? I just hover my mouse over it, and I can see it light up in real time. So, oh yeah, no, it looks correct. I'm gonna view discussion over here, right? And I say, yeah, mate, looks good, right? I keep an eye out on the 100% projection. What 100% projection am I referring to? Highlight it, and I'm going to select this little 100% projection here and send it through. So you're like, oh, what 100% projection? You notice how that little line lights up, 100% projection, right? Nice channel. Yes, you guys have it if you are an IronFX member, IronFX client, right? It's a VIP.IronFX room. My team provides the technology for it. We provide the research for it, right? We provide the analysis, we provide the consultation for it. So if you guys have an IronFX account, you should be utilizing it, all right? I'll share with you more details on how you can get access to this later on. Moving on, right? Moving on. I need to share my other screen again. Now back to this, all right? So it's the same thing like Fibonacci projection. 78.6% is also a very strong Fibonacci, right? Same thing, you know, you have a nice starting point over here, goes down, middle point, ending point, right? See, pro tip, look out for the zigzags, right? And then what you're going to do is you will only trade it the first time, right? Meaning that once price comes down to here, you're playing the first trade. Okay, you are only playing the first trade. If price comes down here and it goes up and it goes down and it goes up, down, and it comes down again, don't bother taking the trade. Only take the first trade, all right, guys? Very important, okay? It only works the first time, right? If our take profit was over here and price bounced up like that and it went down again, get out of the trade. It's not going to work anymore, right? It only works the first time. So what kind of risk reward do you take for these retracements? I will share with you a little bit later on how you can plan your risk reward for these trades. Good question, Chunhao. Yes, you'll say it's essentially catching a counter trend, but let me share with you a concept. You take a counter trend, it is theoretically contrarian trade, reversal trade, counter trend trade, right? But what it does, right, is, for example, if you're taking a count, you know, for example, over here, 100% Fibonacci projection, you're taking the counter trend trade to play the bounce up like this, right? You're looking to play the bounce up like this. Now, if the larger market is like this going up, right? Technically, there's still bullish momentum here. So to increase your profitability, you then have to, right, look for the larger momentum. It has to be in your favor, right? That increases the probability of a trade working well, right? So yes, Omoyatama, right? It is a counter trend trade, but you could, if you're trading in the larger, it's a counter trend trade. It's a smaller counter trend trade, but if you trade it in the direction of the bigger trend, right, like this, there's bullish momentum going upwards, right, then it's actually in not a counter trend trade, and the momentum will work in your favor. All right, so what might look like a small counter trend on the smaller time frame, right? If you zoom out, it might be in the direction of the bigger time frame, right? So this is one way you can get momentum to work in your favor. Okay. All right. Moving on. Yep, so you can see, touch very nicely and bounce. So I just got to drink a bit of herbal tea. Every time I get too excited talking, I lose my voice. Now, moving on. Another example of a projection, 100% is also a very nice projection. Like I said, 61, 78, and 100%, all really nice projections to use. Bam, look at that. Touch it and reverse. Of course, I'm showing you examples over here, but a lot of it, sometimes if you wonder why in the world is price reversing off a random level, there's no support or resistance there, most of the times it's Fibonacci. What you need to look out for, right, is the zigzag. Okay, look out for the zigzag. The clearer the zigzag, the better the Fibonacci. Okay, just ensure that there's a little bit of bars in between, right? Your zigzag should not constitute of 1 bar, 2 bar, and 3 bars, right? You need a few bars to create the zigzag. Now we have another one called Fibonacci expansion. This is to confuse you guys a little bit more, right? So Fibonacci expansion is tricky. I'm going to pause it here. You are using the Fibonacci retracement tool, right? You're using the Fibonacci retracement. Notice how you have 1 point and you have an ending point. You don't have 3 points, but you need price to minimally retrace at least 50%. And then form a zigzag upwards. And you're looking at the negative 27%. Right? No worries, Sylvester. I'll see you around. Okay. Right. So yeah, zigzag, as you can see over here, right? You need price to retrace and then shoot up. This is for Fibonacci expansion to work, right? You are using a retracement. There's only 1 point over here and 1 point over here, right? But then you need price to retrace at least 50%, right? In a nice downward movement. And then it needs to shoot up in the other direction, right? Shoot up here. The level that you want to look out for is a negative 27%. It looks very similar to a Fibonacci projection where it uses the 1 point, 2 point, 3 points, right? The starting point, the middle point, and the ending point. But Fibonacci project expansion is different. What I just taught you just now was projection, right? It's a different tool that you use on TradingView, right? Fibonacci expansion is the same Fibonacci retracement tool, but you have a different criteria, right? And it all lines up over there. Okay, what is beautiful, of course, is if you are able to find confluence here. I'll share more about it in a minute. Okay, but anyway, let me show you what it looks like then, when Fibonacci expansion. You are then looking, right? You're looking for price to reverse of this negative 27 level, right? So you watch this level, price comes all the way up, touch the level, and very nicely it reverses downwards. That is how Fibonacci expansion works. Then we have the last one. It's called the Fibonacci extension. Or if you guys might have watched some of my previous webinars, I call it the Nike tick, right? I call it the Nike tick trading strategy. Very nice. You're also using the Fibonacci retracement. And yes, it's a nice little Nike tick, right? I can say I call it the Nike tick strategy. I coined this term, by the way, right? So what I'm looking for is for price to go to the 127 or the 161.8% retracement, right? It needs to have a very strong downward movement and a very strong upward movement, right? You're looking for the reversal of the 127, as you can see over here, reversal of 127. And if 127, if it doesn't hold, the 161.8 is the next one. Okay, one of my favorite, because one of the cleanest and easiest trading strategies like Fibonacci's to use, right? 127 and 161. That is exactly what you're looking for. Looking for the reversal back to 100%. All right, you're looking for the reversal back to 100%. Exactly as you go over there. Okay, that is the Nike tick, or rather the Fibonacci extension, how you use it. Moving on, right? This is an example of a very nice Nike tick, right? So as you can see over here, right? It starts over here, wham, goes all the way down, and it goes straight line up. It touched the 161.8 and look for the reversal back to the 100% level. Okay. Let's see some other examples, of course. Another example, very nice, small little Nike tick. Now, the trading strategy is actually, right, the trading strategy. I think it was a Chun Hao that was asking me earlier. Risk to reward, right? The trading strategy which you're taking is actually, you're looking to play from the 127 over here down to the 100. This is your locus of control. You have a very, very high chance of getting this right. Okay, we want to play to our strengths. We got a high chance of getting this right, so let's focus on that. Okay, now what I mean by that, okay, so an analogy is that, guys, if I told you today is Wednesday, if I told you that it's gonna rain this Sunday, right? you'll be like, you know, the weather forecast tells me it's going to rain on Sunday. I'll be like, yeah, you know what? It might not rain, right? It might be sunny. It's very far away. If I told you, if the weather forecast says that it's going to rain in 2 hours, right? You look at the sky and like, oh, yeah, it looks like it. And you'll be a lot more confident that you're going to take the umbrella out, right? Because it's within your locus of control. If something is further away, it extends beyond your locus of control. So when you're trading, it's not about going, right? It's not about going for that Hollywood trade to take the move all the way down there. It's about just playing with confidence to your strengths, right? I know that there's a 20% chance that it might break out of this level. I know that there's an 80% chance that it reverses to this level. That is enough to build a very profitable trading strategy. That's it, right? The odds need to be in your favor. Remember, a casino, right? One of the most profitable businesses that reach break even in less than a year, right? It's a casino. A casino as a roulette table, the odds are always in the favor of the house. Sometimes the odds are like just 2% or 3% more, right? But they always win in the long run. A trading strategy like this, which I'm sharing with you, if you know how to use Fibonacci Confluence, right? You have about a 70% win, a 70% win rate. Your risk to reward is usually 1:1.5 or 1:2, or 1:2. This is enough to get you to be a very profitable trader. All right. Sam. All right. I'll take a look at XAU USD in a bit. So this is the idea, right? I'll be showing you how to put this into action in a bit. Okay. Moving on. Another example. Nice little Nike tick. Price touched the 161.8 Fibonacci extension. And even before I touch over 161.8, guys, I do want to show this part to you, right? Is that it actually came down to touch the 127 first. And this bounce up here, right? This is where you make the money, right? So you make the money here once, it comes down here to the 161, maybe you can make the money, you can make money here again, right? So this is example of just using Fibonacci extension by itself to make money, right? And Confluence is like this. Confluence is combining multiple things. So we can first use the Fibonacci projection. All right, we got 100% right there. Then we use the Fibonacci expansion, right? We got -27. Then we use the Fibonacci extension, the Nike tick, but maybe reverse, right? I got 1, 2, 3 levels over there, right? I'm going to highlight this area as my Fibonacci confluence area. And I will then play a reversal of this level. You can see price testing that level, testing, and then bam, it goes up. That's confluence. Confluence is combining multiple Fibonacci together, right? To give you the best chance of being profitable. Okay, that's the concept of Fibonacci confluence, right? Nice to know, Abdul, right? So this is an example of Fibonacci confluence, same thing, right? You combine the retracement, you combine the extension, you combine the Fibonacci projection. All of it lining up very nicely to lead to a bounce. Some other examples I have over here, right? I will explain it for you. So in this example, how I'm going to put my entry, stop loss, and take profit. Where you find at least 2 Fibonacci's line up, that will be your entry point. Your entry is always slightly lower, right? Just put it slightly lower from the confluence, right? Okay, I'm going through confluence now, Nana, so no worries. All right, confluence is just right about here. Let me just see. Yeah, so you want to put, if you find a confluence level, you want to put your entry slightly below. Your stop loss, right? Your stop loss, right, is just slightly above. Just give it a little bit of breathing space. If you know how to use Fibonacci extension, right? If this is the 127 extension, like over here, if this level is 127, right, my stop loss is usually at the 145. I think it's the 145% up here. Or if you want to be if you want to play the reversal very nicely, 13131. How does that look like? Okay. Okay, wait. So this would be where my stop loss is. I give it very tight breathing space. I might take profit, right? My take profit would be just slightly above this level. This is where the 100% is. Why? I don't put my take profit beyond here. Like I wouldn't put my take profit here. The reason for that is if you think about it, this is where price just did a major breakout from, right? There is a high chance that price might come down here and then bounce up, right? This is where all the breakout traders, they're looking for the pullback. They're looking for the pullback to get in and then play the continuation, correct? So I don't want to put my take profit over here, right? I'll put my take profit slightly before there, okay? I'll put my take profit slightly before this level. So if I will put the take profit, it probably be the 105 level over here, the 105 for Fibonacci extension. Okay, we'll go through some theoretical practices later, right? So another example over here, right? Very nice Fibonacci confluence, Fibonacci projection. So this is how we got the levels, right? This is the Nike tick, reverse Nike tick first. After the reverse Nike tick, then we got the Fibonacci zigzag 1, 2, 3 projection. Then we got the Fibonacci expansion 1, retrace at least 50% and come down here, right? Nike tick, negative 27, 100%, and 1 to 7%, right? Fibonacci expansion. Take the trade, play the bounce, okay? My stop loss would probably be at about the 141 level, right? Let me show you how it looks like in a bit. Maybe I can show you once I'm out of all my examples, right? I can show. Oh, this will be one of my last examples, right? So this is how you combine Fibonacci with support and resistance and momentum. This is top tier. How you get the best setup. Okay, so we notice here this very nice resistance line over here. Price bounce off this level multiple times in the past. All right, so this is a nice resistance line. Okay, what happens is that this resistance line happens to line up with a 61.8 Fibonacci retracement. Right? Joe, there is actually a Fibonacci projection. There is. I'll see if I can show it to you later. Right? It kind of sucks because it's not as good, as easy to use as trading view charts, but it actually works. There actually is something. All right. The bigger Fibonacci retracement, there's a 50% retracement there. And at the same time, right, we're looking for price to come up to this level. You have a nice pullback resistance. You have nice descending resistance, like bearish momentum. Price is making lower highs, and lower highs. You have the 61.8 retracement, and bam, you play the reversal down. So this is how you combine support and resistance with Fibonacci. Okay, knowing how to identify this support and resistance is very important. Okay, now I will go into explaining how you can like look at this. Let me just see really quickly. I think some of you guys were asking regarding gold, right? So I might as well show you our coaching charts. This is the best place for you to practice your trading. Okay, so you might be over here, and I think some of you guys were saying it's a 4-hour chart. Was it the 4-hour chart? Or is it 1-hour chart? Yeah, it looks like the 4-hour chart. All right. So on the 4-hour chart, you might be wondering, right? Is this a Fibonacci extension? Let's just say you draw it from here, right? You draw it to here, and you draw it to here. I notice that you drew this line over here. If I notice that you drew it wrongly, I can come in here, right? If you're using this tool, and I can click on it, and I can say, hey, mate, it's supposed to be over here. what you notice is that this line, it shows the before and after, right? The before and after, right? It actually teaches you how to draw your lines correctly, right? So another example is that maybe, right? Maybe you draw your resistance line, you draw your resistance line over here. And I say, yo, you're drawing a resistance line wrong. You drew a line over here. I think your line should actually be over, capture, like just say over here. You capture more of the wicks over here, correct? You can then see the before, after, before, after, before, after, right? It allows me to basically coach you, me and my team, of course, to coach you on how to draw your support and resistance lines, how to draw your trend lines, how to draw your Fibonacci, right? You could be drawing your Fibonacci like this, right? And I say, of course, it's wrong. You need to draw your Fibonacci like this instead. So you can see your before and after. Before, right? So I can come in here and tell you that, yeah, you're drawing it wrongly, right? Blah, 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 right? This is what we call the coaching charts, right? It's also available in your IronFX VIP trading room. For those of you guys who are asking about gold, right? I think if I were to do analysis on gold, I would be waiting for this level up there. This level on gold has a negative 22, a nice Fibonacci expansion here, right? You notice price retrace at least 50%. It has a nice 10.8.6 projection, and it has a nice swing high resistance. I will look to play the reversal on gold, and I'll probably play it down, or I'll probably play it all the way down to maybe just this level. All right, I may just play all the way down to this level. Notice as I'm doing analysis, all these things are being recorded, so I know how you're doing your analysis, right? I can give you the feedback on it, right? Yeah, you can place projection levels on MT4. I'm going to show you how it looks like, right? So let me see if I have it over here. Are you guys able to see my my MT4 charts? Yeah, so to do Fibonacci extension, right? I think you need to right click on here. You need to customize, right? And there is probably Fibonacci expansion. You want to click insert, right? And then you remove lame stuff, right? You remove the other stuff like the arrows. Maybe you remove it here, right? Remove the text, right? Yeah, there you go. Now you got Fibonacci expansion here. 1 point, 2 points, 3 points. You can move the points up and down. Okay. What you're seeing over here, right, is this the multi-time frame support and resistance indicator, right? You can toggle the strength, right? You can toggle the time frame, right? And it actually tells you like what are the strong levels to watch out for. Like over here, it highlighted that a very, very nice resistance level here. The reason why it's a nice resistance level is because price has reversed once, reversed twice, reversed 3 times from here already. Okay. And after that, right, you can look what it looks like on the 4-hour chart. Where's the sorry, I need to disable my drawing tools, right? Where the 4-hour resistance is, where the 1-hour resistance is, right? You can toggle all the different time frames to see like on the lower time frames and the higher time frames, where are they lining up, right? If you just search for best MT4 support and resistance indicator, this is one of it up here. I actually coded and created it in the past, right? It sells for 150 USD, but we're giving it out as a price today, right? We're giving it out as a price today, right? So this multi-time frame support and resistance indicator, right? And give me a moment. Where is that IronFX thing? All right, so this is the promotion that we have, guys, right? Where is it? This is the promotion that we have, right? Whether you are a new or existing IronFX client, right? All you need to do, right, is to deposit $250, right, after this webinar, right? You will get access to the VIP coaching charts, which I showed you earlier. Usually you need, I think, 10 grand, $10,000 to get access to that, right? I will also give you access to reversal strategy course. Everything which I taught you today, but I put it into a 6-part series for you to watch. Okay. The first 10 people will also get the support and MT4 support and resistance indicator, which I showed you just now. All you have to do is the moment you have opened your account, right? Just let me type out this guy's email because it's so tough. Notaris.com. Did I get it right? KZRKT. Oh my goodness, his email is so tough. KTZIORTZIS, right? You can take an email picture of this, right, if you want. That is the email. That is the email that you want to send to, right? The subject line is very simple. The subject line is a IronFX webinar promotion, right? Tell him that you funded your account with $250. You could be a new client. You could be an existing client, right? Just head over to ironfx.com and register, right? And you should get access to the VIP coaching charts, right? The VIP room that I showed you just now. You can practice, and my team will be able to guide you on it, right? You have access to everything I'm teaching you today, but more in a 6-part format, a lot more detail, teaching you support and resistance, Fibonacci, momentum, trade management, right? And you get access to the support and resistance indicator I showed you just now, right? It might be possible to watch a recording. The coaching will last 30 days, right? Yeah, as in the coaching chart access, the coaching chart access will be, I think it'll be forever, right? You have access to it forever, right? When will the promo end, right? I think the promo, let me see. Let me see what they say. Promo end. I think the promo will last until next end of this week, right? So at the minimum, register for an account, because I think beyond this week, they might not be able to create an attribution for it, that it came from this webinar, right? So as part of this promotion, right, I recommend by the end of this week, right, if you all can open an account and just put in $250, right? I mean, technically later on, you can withdraw the money if you want, but of course, just keep it inside. If not, I'll look very bad, right? So keep it inside. You can use it to trade, but more importantly, you can then use it, right, to access the VIP coaching chart. You can use it to access the reversal strategy course, right? You can use it to access the advanced support and resistance indicator, right? All these good benefits, right? Just for putting $250 in. You can pay more than $5,000 out there, and you will not get the same level of education, which I've just shared with you in this last 1 hour. Okay, so my advice, right? Probably just go for it, right? I'm not going to earn anything out of it, right? For me, we provide the technology to them. They're paying a lot for the VIP trading room. Hope more of you guys use it, right? So Lucino, right? I can't answer that, right? This is a recorded IronFX webinar. I think IronFX might have their own prop, might have a related prop firm entity somewhere. You need to do a little bit of searching for that, right? Oh, Cleon, that is weird. You got the indicator, but not the chart and cost access last time. That is weird. Maybe I need to. If it's not the chart and cost access, then you probably need to you probably need to be granted special access to it. But you have at least $250 in your account, right, Cleon? Cleon, right? You can get into the VIP training room. Your live verified account. Okay, message message that guy, the email which I sent, and let him know your problem, right? We'll see how we need to grant you special access, because yeah, access to the VIP room and all this stuff usually is at a much higher price point. So we need to grant you special access for it. Okay. Yeah, guys. So I hope you guys, right? I hope you guys just no, $100 is not possible. Need at least $250. I'm sorry, guys. Right. Right. Do it as soon as possible. First 10 gets the support resistance indicator. If you already have the indicator, I can give you another one, a trade manager or something. Right. So yeah, you get to redeem it twice. Right. But thanks, guys. Right. Yes, you do need to do KYC for IronFX, but at least go and register the account first, right? Because I think once you register the account, you lock yourself into the promotion, right? I can't promise you guys, those of you guys who attended my webinar previously and managed to get access to it, you know how tough it is, right? Just to get access into this promotion, right? All right. Thanks a lot, guys, right? No more time to attend questions. You know where to find me, the VIP trading room, right? And yeah, thanks so much for staying throughout this session. What I'm going to do, right, is I'm going to put a little poll. I think it's here. Yes, if you guys don't mind, right, help me vote, right? Help me, help me vote how you found the session today, right? You help us improve the webinar. You find it 4 or 5 stars, let me know. Smash that thumbs up button, right? That voting. And if it's 1 star, let me know too on how I can improve. We'll be more than glad to I'll of course be more than glad to improve it over time. Okay. Bilkish, I think you need to. I'm so sorry. Right. You need to put it in again. Okay. Now, all right. Okay, we got at least 96% of you who voted for 5 stars. Thank you very much. Really appreciate it. Right. I'm gonna end the poll over here. Thanks so much, guys, for attending today's session. If you had funded previously, yes, you do need, right? Sally, you do need to put in $250. You might have not have got access to it previously, so please do it sooner rather than later, right? Because these spots get taken up very fast and it's up to their discretion on when they want to stop the promo, right? But now it is possible. Now it's a pretty good promotion, right? They're paying a lot for it, so might as well do it. Okay, guys, that's it for me, right? Those who are watching this on recording, do take the chance to, of course, go and open an IronFX account, right? Just head over to ironfx.com, right? Go register for an account there, right? And fund it, right? That's it for me. In general, how much is the VIP coaching only? I think you need $10,000 in your account to get access to that, right? Let me just see. Let me just see. I think it's here. Yeah. Yeah. So if you're on ironfx.com, you can actually go to like the VIP trading room. Yeah, VIP room over here, right? The VIP room will show you all the things you can get access, and you notice that just to actually get be able to like DM prop traders, right? And like get the kind of priority support is actually 5,000 and 15,000. So we're giving you access at a lower entry price, right? So make full use of it, okay? This offer does not come often. That's right, Chun Hao. All right. I hope you guys have a little bit more money to put in and like get access to it. That's it for me, guys. Right. Thanks for staying throughout this session. You guys have been wonderful, amazing, really engaging, really fun. Stay safe, trade safe. I hope to see you guys in the VIP trading room. Right. You know where's the link to sign up, and of course to email the guy once you have signed up. Okay. Right. Stay safe, trade safe. Peace out, guys. Peace out. Bye-bye. How do I do that little reaction? Oh, no, it's clapping for myself. Bye.